in here. I think we got the recording set up, so
all right.
I think we're gonna go ahead and kick it off. So, hi and welcome to the Real Estate Nerds Podcast. I'm your host, Scott Royal Smith. I'm the owner of Royal Legal Solutions, your one-stop shop for everything real estate investor related, tax, business, legal. We do it all. We're also giving away free LLCs right now, truly free LLCs. We're even paying the filing fees for you guys. We're on a mission to get everybody in the United States protected and make sure they're optimizing for their tax savings, which you need an LLC to be able to do in the right way. So we're giving away those for totally free for every single person that contacts us. We're talking about anonymous LLCs formed in the state of Wyoming. They're very, very strong. If you don't know the importance of being anonymous and pulling your name off of the public records to help protect yourself, you need to learn a little bit about the importance of privacy, and we're here to help you do that. So you can get that through our website, royallegalsolutions.com. Just log into there. You're going to be able to see all the banner ads to be able to know exactly where to go once you just go to royallegalsolutions.com. I'm here today with a good friend of mine, Jonathan Twombly. He lives in Brooklyn, New York. He's also an attorney, 12 years in commercial litigation and a real estate investor. He just sold all of his properties, and he's not envious at all of my place that's here in Austin overlooking downtown that you guys can come see it up in here. I'm shooting this from the Casa here today with you guys. So thanks so much for joining us. And so Jonathan, thanks for popping on the show here today, man. And checking us out here. We're on Facebook Live right now too, for everybody that wants a sneak peek here of the podcast. But give us a little bit of background before we jump into the worst real estate deal that you've gotten into, about who you were getting into that deal, and kind of set the stage for us so we can understand what are the things that led you into this worst deal.
Yeah. So as we said, before, as you said before, I practiced law here in New York City for about 12 years, doing commercial litigation. Basically was, representing Fortune 500 companies, fighting with other Fortune 500 companies over enormous piles of money that at the end of the day didn't really matter who won. It was extremely stressful and kind of dull at the same time. So I really had to get out of that. I actually wound up losing my job in 2011. It was kind of like a belated casualty of the financial crisis, where the work just dried up and I was sitting on my hands with very little to do. And my firm decided, this doesn't make sense to pay this guy all this money to be surfing the internet all day. So I left that, which was really actually great because I had been trying to quit for a long time, but kind of had the golden handcuffs. So getting sprung was kind of like getting out of jail for me. I knew I didn't want to go back into law. I'd had some money saved up, so I had the opportunity to go figure out what I wanted to do when I grew up. And right around that time, I met somebody who was starting up in commercial real estate, and we teamed up. She said, I think you've got the ability to raise money. I'll do the deals. We teamed up on that basis. We were able to raise quite a bit of money. Got into a couple of deals, couldn't close them. We wound up trouble with the banks. I mean, this still probably people forget at this point, but 2011, banks were still really gun shy after the financial crisis. And, they were kind of looking for reasons not to do deals. Obviously they wanted to do deals to make money, but they were really, really skittish. So they didn't like the, charitably C- deals that we found in Louisiana, pulled the plug on us. We lost a bunch of money. These are not, by the way, this is not the worst deals that I did. But it was a bad experience, but a great learning experience. And I wound up from that experience going out on my own, forming the company that I have now called Two Bridges Asset Management, and formed that company in 2013 and started poking around in the Carolinas looking for deals down there. Finally got the first one done in early 2014, and kind of built a portfolio pretty quickly over the next couple of years until the pricing just really started getting out of hand. And I started getting a bit cautious myself about where things were going. So just sat on what I had for a while. And then in the last couple of months decided, now's the time to sell. The market's at an all-time high, and, usually they don't keep on going up from that point. Thought the risk was greater that it was going to go down than it was going to continue to go up.
And what date is that? Like, what year is this that this is happening?
Selling that this was
Yeah.
a couple months ago. This is this year.
Just a couple months ago. So
Yeah.
you're out of it completely right now.
I'm out of it completely right now, and what I'm doing right now is still continuing to build my investor platform. I know there will be a correction. Even though it feels like it's never going to come, I know there will be one. I want to be ready for when it happens this time around, and be able to hit the ground running with all of my ducks lined up. So I spend my time these days doing that. I do a bunch of podcasting. I run a big Facebook group. I do coaching for real estate for folks who want to learn how to do what I did. And, that's how I keep myself busy these days after I sold the portfolio.
That's awesome, Jonathan. Well, I think your story is, super powerful to be able to talk about, what do you foresee happening in the markets and what kind of tough decisions you have to make when you're, when those are coming up for you. Right. So, I think it's super cool to think about that and say, okay, well, sometimes you just, you want to be out and you want to retool and get ready for your next buying opportunity when that's going to come, and have some patience. Say, I think markets are going to correct. I want to be out to pull some money off the table here. I'm going to wait till markets correct, and then I'm going to reassess and make a decision about when I want to buy back in. Sounds like a super solid strategy that goes along with that. But somebody that's as smart as yourself and such a great investor when it comes in and making these kind of tactical decisions, how did you find yourself in the position for your worst deal?
It was really through inexperience, right? It was the first deal that I got into, and didn't know as much about the business as I thought I did, and wound up just having a combination of sort of some bad decisions that I made, combined with also additional, bad luck for things that I couldn't anticipate. I think, when things really go badly, I think it's usually a combination of that. It's neither purely like your own incompetence or purely bad luck. Those usually, they sort of team up on you. So that was really how it happens. I mean, this is a business that seems simple, but it's not. And I think that's one of the things that people need to really be conscious of.
Well, when you got into that deal, were you working with somebody else? Did you have like a mentor or a partner that was really experienced, or were you just running solo?
Yeah. So I had somebody that I was working with who had a lot more experience. It wasn't like a formal partner, but he was kind of acting as my sourcing person. And so,
it's like a broker almost for you. They're trying to find the deal for you. Is that what you mean?
Yeah. But it was more than just like a broker. I mean, he got compensated as a broker, but it was more like an advisory relationship. So
Did he have money in the deal with you?
No.
So no money in the deal.
No money in the deal. Just
that's a bit of a red flag from what I see sometimes. How committed is somebody in making sure this deal is right if they don't have money into it? People have best intentions, right? It's just something I've seen quite a bit, and my experience of talking through these worst deals and just highlighting that for the audience for it in there. I'm not trying to bust your balls too bad, Jonathan.
That was not the reason that the deal was a bad one. I mean, I have thought about that I have thought about like obviously the incentives were a little bit out of line the way that we set things up in that sense. Right. But I think really more of the problem was, say, for instance, hiring the wrong management company, kind of like going against my gut and hiring a different company than I really should have done. Like that was probably the biggest sort of failure. But there were other things that, I think sort of knowing what I know now, like I didn't know enough about underwriting deals, and I should have been more conservative. And perhaps if I'd been more conservative in the underwriting, I might not even have been able to get the deal. Right. I mean, I thought that I was getting a bargain, but I really.
Well, how did it go so sideways on you? I mean, it sounds like you said that like you had somebody that was really experienced. You don't think it's that they didn't care. It was because something else was wrong with the deal. So maybe you didn't know the experience, but did you think that the other person did and they didn't? Or what do you think?
That wasn't it. So I'll tell you exactly what happened rather than sort of beating. So, the real sort of first issue with the property was that we just really put the wrong people in place on the property. Right. So I went in and I hired a management company that I had built a relationship with when I was uh, working on deals in Louisiana and Texas with my first partner. We'd found this management company that, it was very hard to find a management company that would work in Louisiana. Apparently, we had trouble finding one. Finally found one. I built this, relationship with them, and I let the relationship kind of interfere with my judgment. So when I started looking at deals in South Carolina, they had a couple of properties there, but they didn't have properties nearby in the market. They were obviously like really eager to get into this market. And, they sort of like buttered me up and did a lot of flattery and stuff to get this deal, to get the management contract on this deal. But I did things that just really, like, my gut was telling me that I was doing the wrong thing, and I ignored my gut. So for instance, when I got the property under contract, it did go through the process of interviewing a number of different management companies, identified a management company that was local that I liked quite a bit. They'd actually had a history with this property. They knew the property really well. Obviously, they knew the market really well, but they were a smaller company. And, I made the decision to go with the first company because I'd already sort of emotionally committed to them in my mind, which, looking back on things, that's a dumb thing to do. Like in real estate, you should just never get emotionally involved with anything. Never get emotionally involved with a property, and never get emotionally involved with any of the people that you're dealing with. But I think I kind of like somehow committed myself to this company because I'd had a relationship with them for a couple of years. So I decided to hire the one that I knew rather than this other company that had a history with the property and was local. And I did that in spite of, we had a sit down interview with the with the regional who was going to be overseeing the property. And I really, when I talked with her, she didn't seem like a very aggressive kind of like go-getter type who was really going to be, doing her all to like get this property running well. Right. And she wasn't based locally. She was based in a different city in South Carolina and was going to be overseeing it from there. And, my gut was telling me like, I'm not really sure about this. Right. And, but I decided to go with the bigger company anyway. And, the guy that I was working with, who had no skin in the game either way for a management company, wasn't going to affect him either way. So he had no basis for choosing one over the other. He said, go with the bigger company. They have more resources, and that sort of made sense to me, given this kind of decision I'd already kind of made in my mind. What happened then was that my kind of foreboding about the regional were fulfilled as a number of other sort of, I guess, somewhat bad decisions took place. So the next thing that happened was when we were doing the due diligence on the property, we kind of figured out that the on-site staff that was there was just really not very good. And, we like tenants were coming up to us while we were doing our due diligence and complaining about the maintenance guy, like about him being really creepy, and like doing stuff that he shouldn't, like being in people's apartments when they shouldn't be. So we knew we had to get rid of him. The manager just struck us as someone who was also not proactive at all. And I mean, our judgment was right. As it turned out later, talking with other people in the market, that particular manager had a bad reputation in the marketplace. So getting rid of her was not an issue. But the real problem was having a management company from outside the market and then having no staff, because we terminated, we didn't take those employees in. So now we had a management company that was from outside the market, didn't have any pull in hiring. They sent in like a transition team from outside, but they were basically desperate to get anybody they could to work on this property. And it took them, they kept on getting turned down because, they'd offered the position to somebody who turned them down because they didn't have, they didn't have any, local connections at all. And they wound up hiring somebody for this, market rate property that had only experience in subsidized housing and didn't know how to market a property. So the occupancy in the property quickly, this was like 95% occupied in the market. We, within a year, we're like down to 85% occupancy.
Wow.
Because this manager never got out from behind her desk and marketed the property. And so here I was, like, I was doing all this market research and sending them like, here's where all the jobs are, guys. Like, here are the 10 factories that are within a mile of this place. Like, go there and market, hand out some flyers or something. And they were like, oh, that's a great idea. I'm like, come on, guys. Like,
did they actually execute after you told them like where to go do it?
I think they did a little bit, but the thing is they just didn't know what they were doing.
Okay.
Right. And then, if I had done more due diligence on this particular company, I would have found out that they didn't have the greatest reputation.
Yeah. Can I give you a hot tip that I just learned this weekend?
Sure.
At this predictive, I went to do this training this weekend on the predictive index, and it's actually what you use for like HR software.
Yeah.
For like your people or whatnot. And I met somebody in there that was another entrepreneur, and he says he actually makes all of the people that he works with go do it, because it actually tells you what all of their tendencies naturally are going to go be into it, and that you can find out a ton about like what somebody's reputation is. But like if you can get them to take these assessments, then you actually know like a ton deeper versus what they actually work like versus what the mask is that they show you. Right? And they can be like, oh, cool. I can see that you're telling me that you're like a super high task oriented person, but you're really not. So I'm gonna have to whip you constantly to actually go do shit.
Yeah.
Right?
So this deal though, like this is the kind of thing. It's a third party management company. Like you're not, as the owner, really involved in the hiring process because these are their employees, right? So you're not involved in any of that. But when they called me and they said, oh, we finally found a manager, but she is from an affordable housing background. Again, like I had that gut feeling going, this isn't right. But I made the mistake of deferring, right, and not stomping my feet about this because I thought, well, they know what they're doing. They're the professionals. I'm just like, I'm new at this. And I think one of the lessons that I learned was that like you gotta listen to your gut, right? Your gut is telling you something. And when something is not sitting right, you got to make a stink about it. Right. So that was, what happened. We wound up having like, people on the job who didn't know what they were doing and, just basically running this asset into the ground. And we just got into the situation where we just got so far behind payables that we couldn't dig ourselves out of the hole. And then the mistakes cascaded after that. So for instance, we just had this terrible bad debt problem on this property. We couldn't figure out why. We knew what going in when we'd done our lease audit, that this wasn't the strongest tenant base, right? And as I later found out, the person that we bought this deal from had a reputation. Again, this is like a rookie mistake that really had no way of knowing at the time, but this guy had a reputation for kind of just like filling up properties with anybody who showed up just so he could sell them. Like he was flipping properties and it was just like filled up with bodies. So we were finding in the tenant file, tenants where in the file, the credit check said reject and they leased the property. They were leasing property to people that their own screening software was telling them to reject. Right. So, so we knew going in that we had an issue with the tenants, but, you can work through that. But after, a year, when presumably we had gone through the whole rent roll and gotten rid of all of the bad apples, we were still having this really bad debt, this real bad debt problem and a high number of evictions, and we couldn't figure out why. And meanwhile, we're kind of accumulating other property. And for the longest time, we couldn't figure out why we were continuing to have this bad debt problem until somebody finally discovered that the vendor who this management company used for their tenant screening had set the tenant screening criteria to affordable, right, rather than conventional. So instead of 3 times rent for income, people were getting approved if they had 2 times the income.
Oh no.
And so nobody could afford to pay rent. Like after they paid their car payment, they had no money, right? So So when we finally, but here's the comedic thing. So this was finally discovered, right? And they went to the vendor and said, you have to correct this. And the vendor, instead of correcting it for that property, went and changed all of our properties to the affordable criteria. So suddenly we started having this spike of bad debt everywhere, not just this one property. And nobody checked that until we're like, what's going on? And then finally they discovered the error, but they let it go a couple of months. So there were just, this is just a couple of the things that happened on the property.
This sounds like one of those issues where you run into where it's like, give direction, but always follow up and like check it, like on each Ren episode, Real Estate Nerds episode we always kind of wrap up the episode with like a lesson learned. And like for me, that's like the lesson I'm pulling out with this is like, sure, give orders and direction to people, right? But then take that extra step to kind of check it until you can be sure that they're careful enough to actually execute.
That they actually did it. Yeah.
Yeah, to do it.
But that's the kind of thing, like when they discovered the error, right? And they said, oh, we've instructed the vendor to fix it. Like that's the kind of thing that you really don't expect them to get wrong, right? Like you don't expect the vendor to go do the opposite of what they were instructed to do.
Right.
So, but like it wouldn't even have occurred to me at the time to check that.
Yeah.
It's like so basic. But yeah, you're right. I mean, you gotta follow through on everything and make sure it's getting done. Right.
Yeah, especially at the very beginning of new relationships, right?
Yeah.
It's like you gotta like almost check everything to annoying level of detail into it to like really drill down. And I found that that's really been like my defining mark in a lot of my professional relationships, both like with people that I employ through RLS, but also with my professional relationships for my property management, et cetera, is that if I really put the screws to people within the first like month, and then I'm checking like everything they do, then it sets like an expectation of like, this guy's really serious about like everything being followed to a T. And then I get to see like, even if I'm watching it like a hawk, can they perform? Because if I'm watching like a hawk and they can't perform, then when I'm not watching, I can be sure they're not going to perform.
Right.
Right. But that is really tough to do with doing what you were doing, which was like still trying to really be active and acquiring new assets.
Yeah. Yeah. So, I mean, we had really been planning to just grow a portfolio and hand off the management. But, another lesson learned there is that, just having a management company is not enough, right? You have to have the right management company and you have to manage them the right way. You have to hold them accountable. And it's, and sometimes you can't see what's going on. And even if you're speaking with your manager every single week, and they're telling you the right things, when it's not showing up in the numbers and they can't really explain it to you, why things are not working, or they're just saying, no, it's fine. We got a handle on it. Like you really got to dig deeper, So the next thing that happened was that, we threatened to fire them. So, which of course, then they sprung into action. They did this whole song and dance, and the CEO was like, I'm going to fly to New York and I'm going to, sit down with you and we're going to make sure that this all gets straightened out. And, they did this whole big production number, which kind of wound up buying them some more time, but they were never able to fix the problems that they created. And ultimately we had to terminate them. And we brought in that original management company.
Wait, you killed all of them?
Yes, we did.
Jonathan, they just lost some money, but you didn't have to go on a rampage.
Well, I mean, nobody's going to lose money from me again. Nobody's losing money from me again after this. I'll tell you that.
Yeah, that's it.
Management companies of the world, get ready. If you're working Jonathan Twombly, you're gonna, someone's gonna sneak up to you with
He's got a bloodlust. What can I say? He's got a bloodlust.
Watch out for that ice pick to the back of the head.
Very specific.
That's
Very
right.
specific. You haven't thought of this at all. All right, cool.
So, no, we have a certain signature that we like to leave to make sure people know. But kidding aside, so we terminated the management contract and brought in the original management company that I wanted to hire in the first place. And, they were much, much better, and I, to the point where I thought this property might not have been the greatest winning property in the world, but if we'd had the right management company in the first place, at least it would have been a lot better. Right? We just wouldn't have had the extent of the problems that we did. But the problems didn't stop. And this is when the bad luck started coming in. We wound up at the same property. It was always the same property. And it's just to the point where every time I got my phone, rang and I saw South Carolina on the caller ID, it was like, okay, what's happened now at this property?
Yeah.
What is it? What's going on now? And most of the time it's just somebody calling me just to for the regular stuff. But we had two major fires at this property within the space of about a month, right?
Wow.
And both probably caused by tenants. We're never sure. The fire department was never able to determine the cause of the fire because the fires were so bad and burned up whatever evidence there was. But probably tenant cause, probably cooking related, just because most fires are cooking related in these apartment buildings. But just to have two of them in a month, we lost 3 apartments in one. We lost 6 apartments in the second one, and fortunately, this was all insured and it was all rebuilt, but it took a really long time, and it just added even more stress to this property, which was not making any money. So it's horrible to be spending, most of your stress, and worry on one property that's not even making you any money. All the work is going on to that one. It's kind of it's not really how you want to be spending your time, just like babysitting this one problem child all the time.
No, 100%, right? I mean, you want to be focused for your growth.
Yeah, exactly.
Yeah. Well, that's awesome, man. Well, thanks for coming on and sharing with us today, Jonathan, about about your deal and the lessons that you learned with that. For everybody that wants to contact you, what's the best way for them to do that?
Well, I would, just before we jump off, I want to tell you though that the story has a happy ending.
Oh, tell me about the happy ending. Sorry, I thought we were at the end of it.
No, so the happy ending is that we sold it for a really good profit and wound up making the investor in the deal very happy because we just basically timed the market well. And, fortunately our going in price was low enough and our coming out price was high enough that we did really well at the end. But the lesson that I learned, and it's made me think a lot about sort of market cycles and stuff, is that if we'd bought that property now, and we had the same things happen to it that we had happen to it, we would have been in like foreclosure, right?
Yeah.
Because overpaying for the property and then having all these problems. So, I tell people all the time, like, this is not a game, right? And especially if you're buying at the top of the market because everyone around you is buying and it all sounds so great and you're getting serious FOMO from like not buying deals, like you better be really sure that the deal you're buying is a good one if you're overpaying at this point in the market, because stuff goes wrong, right? Some stuff is from bad decisions like I made. And if you're starting out, you may make bad decisions, and some stuff is just bad luck. And either way, right now at this point in the market, everything has got to go perfect for you for these deals to work. So, you got to be really careful. So, we were lucky because we got in and we got out at the right time, and it saved a bad deal for us, but it wouldn't happen if we got in right now.
Yeah. Yeah. Well, that makes sense. A lot of the stuff has to do with timing, and timing can save you. Even sometimes they say it's better to be lucky than good.
Yeah. And listen, I think there's a lot of people out there who have been riding up this wave for a long time who've never seen a bad market before. And, they all think everyone looks good when the market's rising, right? It's when the market corrects that, as Warren Buffett says, when the tide goes out, who's swimming naked, and,
right. Well, there's a lot of good advice, I think, that I've been hearing recently about that. Like, we just had Grant Cardone on the show a couple of weeks ago, and I was picking his brain about that because he's saying, hey, I wish I would have bought more real estate. I would just always buy more real estate, hold on to it forever, just keep buying and buying and buying. And I started to drill down with him a little bit. I was like, what do you mean by that? Like, what does the specifics of it look like? He's like, yeah, I'm talking about buying stuff at like 60% LTV. So if market's correct, I don't care because the rent prices are still always going to cover my mortgage payment, right? And I just want to keep hacking away at that mortgage payment over time because I'm thinking, what's my long-term game, And I can't time markets, but so what I'll do is take a more conservative position. But everybody I talk to right now is like, if you're going high levered into a property and you're depending on rents to go with it, I mean, you're just asking to get scalped by a correction of the market.
Yeah, absolutely. I mean, what Grant Cardone said was absolutely the right thing. Like, you've got to go in at low leverage, but you've got to be defensive at this point in the market cycle. But I think a lot of people aren't doing that. I think a lot of people are going in with high leverage to try to make returns. You know, you can't go in at 60 LTV and promise people a 20 IRR. Like, it's just not, especially buying at a 5 cap. Like, you just can't, it's impossible. The numbers just can't make those numbers work. So, so people are going in at 75 or 80%, trying and hoping and praying that they're going to make the numbers that they promise their investors. And I think there's going to be a lot of unhappy investors when this whole thing shakes out. So, we'll see what happens. But
I think so, man. I think you got to be smart. I think you got to partner with the right people. If you're looking to buy property right now, you got to find people that are really going to be in touch with the markets and have some, it's probably a good time to be conservative with what's going on with it. I think there's still deals out there. People are still making money every single day, right? But the question becomes is, how consistent is that money in the long term? And that's where you got to really get together with, like, you got to have good attorneys to watch your back, and that you have to have good CPAs. You need good deal makers that are, doing logical, steps to say, this is what's going to make sense. If market's correct, we're still going to be okay. And have an exit strategy or a survival strategy during that time period.
Absolutely.
And be thinking that way. And so, I'm with you on that, man. So let's wrap up, bro. I think we're out of time here for the episode link for the day. So if everybody that wants to get a hold of you, what's the best way for them to do that?
Yeah, well, there's a number of ways. If they want to get onto my platform as an investor, they can go to twobridgesmanagement.com. So that's Two Bridges spelled out and then MGMT for management. So twobridgesmanagement.com, they can fill out a form to get qualified as an investor. If they want to get to my coaching platform, the best way to do that is join my email list. I've got a great download for them, which you can get for free. It's an ultimate checklist to doing syndication deals. You can find that at multifamilylaunchpad.org/ultimate checklist. So you can go grab that, get on my mailing list, and I send out a daily email with tips and stuff on real estate. So those are probably the two best ways. Oh, and then my Facebook group, which is called Multifamily Investment Community. I think as of today, we're at almost 5,800 members. It's a great group, spam free. So join that. Awesome. That's a fun group. Yeah.
That's awesome, Jonathan. Well, I appreciate you coming here on the show today, and for all the members of your Facebook group, and for your members that are joining your website, your mailing list. I'd love to be able to help all of these people set up their asset protection with the free LLC offer that we're doing. With that, to just be able to help everybody out. What we've seen is that a lot of people are having to make that decision. Do I need an LLC or do I not? And what we've seen is saying, like, okay, well, how about we'll just make it free for everybody, right? You get your first LLC free, then you don't have to think about it, and lets them maximize their tax savings and whatnot with that. So happy to extend that offer to everybody in your groups too, to help them out, provide them some value with that. And it's something we hold open to, everybody in the States, entrepreneurs, real estate investors, just everybody. And we'll even teach everybody how to use it correctly. So not just the upkeep, but teach them how to use it. What are the basics of the tax saving strategies they need to use for the business write-offs they're going to have, available to them because of it, bookkeeping, etc. All the basics.
Cool.
We give it all away for free. So
sounds awesome.
Happy to do that, man. Well, yep. That's all for today, guys. This is Scott Royal Smith. I'm the owner of Royal Legal Solutions. You're listening to the Real Estate Nerds podcast. If you're catching this on Facebook Live, make sure to go download the episodes and subscribe to it on your iTunes or Stitcher. If you guys want, this is a great place to be able to drop in comments directly to this video. If there's other things that you want us to be able to cover in future sessions or future live streams or on the podcast, to be able to give us some feedback on that one, happy to do that. If you have questions for us, we're really active about answering any of those questions. So drop them into us directly into the comments. And one of my staff will be in here to be able to answer for you. Anything about tax, legal, anything that we covered here in the episode that you want to know more about investing, I'm sure Jonathan's happy to help you with that. Go check out his Facebook group. What was the name of that Facebook group, Jonathan?
It's called Multifamily Investment Community.
Yeah, absolutely. Guys, you need to be part of the communities. The communities is where you're going to save your tuckus because that's the place that you can actually crowdsource all the information. You don't need to know all the answers. You just need to be engaged with enough smart people that can fill you in on the questions that you don't know about. Don't run solo. Always grab somebody that's more experienced, or communities of people that are more experienced with you that are going to help you get to that next level. It's extremely important, especially when you're looking with Jonathan does and types of a teaching platform. Those are going to give you the systematic ways for you to build up your knowledge base. So you're not just freewheeling like a cyclone of information and running and gunning. You can't do that anymore. The market's too tight. You need to have a really defined way that you're going to approach how you're going to make money and think about it very systematically. Jonathan just told us that he's out of the market right now with that, right? That doesn't mean, I know tons of people right now that are super smart that are still in the market and they're still buying properties, but they're doing it in a different way, right? So you need to know if you're going to be playing the ponies, right? You're going to need to know the people that are also playing them as well, and the ones that you think are smart enough to be able to help lead you into that direction. Or you might decide that you want to take Jonathan's approach with it, if that makes the most sense to you. Every investor, nobody really knows the future, right? But you got to know who are the smartest people that are lining up with what you believe is going to happen, and it sounds most convincing to you, because that's the best decision you can make. There's no sense. You might not be right. And that's going to happen, right? That's what we talk about a lot of times in our worst deals. You don't actually always know what's going to happen. And most of the time we actually don't. And sometimes you're going to be wrong. But the way that you're going to have success long-term in your business, your life, your investments, et cetera, is actually in the way that you approach your problem solving, the way that you approach the way that you're making decisions is going to be the factor that's going to lead to your long-term success, not any individual deal or any individual decision. That's why people that can lose everything and bounce back as multimillionaires within like a year, right? That's how they do that. It's because their systems and their approaches are so strong. Their networks are strong. The communities that they're a part of are so strong, like Jonathan's community. So go join that today. If you're not a member of the Royal Legal Solutions Facebook group, you're going to want to be a member of that too. That's a place where we're able to answer all your guys' tax, legals, and business questions. If anything that relates to your real estate or your entrepreneurialism, we have very active management in there, either through there or the chat on our website is actually manned by people that are actually equipped to be able to answer high-level questions for you without having to pay a $350 billable hour to get those questions answered. So jump on to Jonathan's Facebook group, go to the Royal Legal Solutions Facebook group, pop into there, and start peppering us with questions about anything that you want to know. We're happy to help you guys. So that's all for today. Catch you guys around the way here soon. Jonathan, thanks for coming on the show, and we'll see you guys here tomorrow.
Yeah, thanks for having me.
Thanks.